Welcome to Pindar Poetry. We hope you learned something new.
You begin by collecting the income statement, balance sheet, and cash flow for at least 3 periods. This gives trend context. Once collected, scan notes and accounting policies to spot one-time items that distort comparatives. Make sure to mark your objective. Are you testing profitability, liquidity, or solvency? Then set up a worksheet with columns by period and a column for percentage change so you can start quantifying shifts immediately. Next, perform horizontal trend and vertical common size analyses to see structural shifts. Calculate percent changes and margins to compare across periods. You should compute key ratios, current and quick for liquidity, debt to equity for leverage, and ROA/ROE for performance, and interpret them against peers or benchmarks. Once done, reconcile net income to cash from operations to reveal working capital impacts. Make sure to flag major variances for deeper line item review. Finally, synthesize results into a concise conclusion. List primary strengths, top risks, and 3 recommended actions. Then run sensitivity checks or simple scenarios to test how assumptions affect results. This helps prioritize follow-up. If numbers look inconsistent, troubleshoot by tracing anomalies to specific journal entries, accounting estimates, or footnote disclosures. Often the issue hides in policy changes or one-off adjustments. Remember to document your steps and questions for stakeholders so your conclusions are reproducible.
Thanks for watching. Consider subscribing if we helped you.